Hey everybody, this is Tom from LenCred, and having fun answering some of your questions, so thanks for sending in your questions. This next one's a pretty big question that we get a lot. It comes in from Summer, and Summer asks, what are the unsecured small business loan rates out there? And Summer, that's a great question, and so let's talk about the rates for some of these unsecured business loans and business lines of credit. And so I want you to know that there's a big spectrum. The rates can be very different for every person, and so normally it's a question that can be better answered after some information is gathered on the applicant. But there are lenders out there that have unsecured loans that can be sometimes below 10% and sometimes above 30 and 40%. So that's a huge range. And you have to remember that it's all a function of your qualifications. So in order to be in that 6 to 12% range or whatever that low tier is, you're going to want to have some good credit, and depending on the size of the loan, you're going to want to look at whether you can provide full financials or not, those kinds of things. Whereas if you don't have good credit, and you don't have any real financials to show what the business is doing, then the chances are that you'll have to pay for one of those higher cost unsecured products that not only have higher rates, but what also changes the game with that is they a lot of times have very short payback periods. So we're not a very big fan of those products here at LenCred. A lot of times you have to pay them back in 6 months or maybe 9 months. So remember, it's always a function of the rate and the time frame that you have to pay something back. So would you rather pay 8% and pay it back in a year, or would you rather pay 12% and pay it back over 3 years? Well, we all know that cash flow is king when you're a small business owner, so remember to weigh those things and say, hey, it might be a little bit better for me to pay a little higher interest rate and have a little bit more time to pay it back because it lowers my monthly payment. Those are all factors you want to consider. So when you're talking about the rates, there's a huge variance between the low end and the high end. One of the things you got to remember is from a marketing perspective, a lot of the online marketing tactics, when they talk about 6 and 7 and 8% rates, you're talking about a very, very small percentage of people that can qualify for those lowest rate tiers. So remember to go into your search looking for what you can qualify based on what you can give a lender. How good is your credit? I know we're talking about unsecured loans, but in some cases, do I have collateral? Do I have a business that I've proven where I can show financials, with net profits? Or am I in the early stages where I can't really show net profits on a tax return? I can only show some money flowing into my bank account. Well, you'd probably be able to get a loan if you could do that, but you're going to pay higher rates and terms for that. So it's all a function of what you can offer to a lender. So yes, there are very small percentage of the times where you can get those low single-digit rates, and then there's other times where you have to find something else that works for your business. Remember, no matter what you pay for your loans or your lines of credit, you always want to ask, can I repay this? Do I have the means to repay this money, whether it costs a little bit or a lot? There's a lot of people that have grown their businesses with high-cost loans, and if you have to do that, just make sure you do the math and you know that you can justify paying back the debt that you're going to take on. So thanks for writing in again. Appreciate the question, Summer. Many other people have asked the same question over the years. We wish you all the best with your business, and thanks again for checking us out.